In this video, we're going to go through a price action basics because today has given us a lot of opportunities to talk about almost one of each category when it comes to how price actually moves. And we're going to start with identifying a trend, identifying a pattern, because every single day there's some sort of pattern, but whether it is downtrend, uptrend, or trading range, there is some sort of bigger pattern that we need to find. Price does not simply just randomly moves on the chart. There's a rhyme and reason behind price action and how it moves, and identifying the bias and identifying the channels is really important. So we're going to start with today's downtrend, because as you guys can see, price started with the big move down, the correction, and another move down, and we are making a series of lower highs, lower lows. We are below this 21 bar EMA, so this is indicating to me that we are pushing to the downside. So we need to find and we need to analyze our trend channel quite accurately if we want to stay on the right side of the market. As you guys can see, we have this nicely fitting channel working lower, and notice I'm not only drawing the bigger channel in the downtrend in the bearish direction, I'm also drawing these shortened corrections because I want to see when the corrections played out, and correction is considered to be over once we get a break, an attempt to create a new extreme, or straight up new extreme. A lot of times the attempt is close enough because the key entry points such as trendline or EMA just is so strong that it will not let price to finish a new extreme, in this case new highs. As you guys can see, we have a trendline working high, we have a break, attempt to make a new extreme, and push to the downside. We have a trendline, we have a break, and we just straight up reverse to the downside because key entry point is so strong. We have another correction bullish, we have a break, new extreme, and this is a two-legged pullback to the upside, and this is the bullish correction played out. And it works on a bigger scale as well. As you guys can see, we have a first break right here of this entire downtrend, and that doesn't mean that we're looking for longs. We're looking for traders to attempt to create a new low with the direction of a previous trend. So we have a break of a trend line, and we're looking for price to create a new extreme. As you guys can see, we have a big bearish bar and price pushed below EMA. Now when price pushes below EMA in the direction of this trend, this is one of those examples where we can look for lower high setup, or we can look for reversal pattern, two failed attempts in the previous trend's direction. So once price is pushing below EMA like this, indicating strong bearish momentum, this is good indication that the bearish trend is resuming, because if the bulls are strong, and let's say for example this double bottom is strong, the price is going to be holding above the EMA and we're going to rally up higher. But it didn't happen, we pushed below, so I can throw the bullish correction out of the window and I can focus only on selling. This was my first trade for the day, and I mainly took this trade based on my 5-minute chart analysis, and I'm going to show you why. So we are here right now on a 5-minute chart, and this is the area that we are going to be talking about. As you guys can see on a 5-minute chart, the structure is clearly a trading range. We are swinging up and down through the EMA, and the EMA is flat. And here was the important piece of the puzzle that led me into taking this trade, because you guys can see we bounce off the support, but we only confirmed it with the tail. Okay, the body closed all the way up to here, and this is such a big gap between the body and the key level between the support that a lot of times traders will want to see the gap filled. Okay, a lot of times if you've been watching my videos for quite some time, you will notice me a lot of times saying, well, you know, this reversal pattern is not touching with the body, just with the stems. You know, you really want to see the bar confirming the key entry point with the body. A lot of times the stem is enough, but in this instance it was really, when it comes to support or resistances, this is really important. In trend lines it doesn't matter that much, but when it comes to support or resistances, you really want to see it confirm with the body, because when we are trading the trading range, we really want to see price even break below the key level. And here we have, you know, even additional room to even confirm the support, because there's the gap between, and this is just how price action works. Traders like to see this gap filled, and really they want to confirm this stem right here. And by the way, this is the new high right here, and this is the first entry long pullback, a second entry long, and this is the first entry short, second entry short below EMA. So we are pushing to the downside. So this was my analysis for this trade right here. And now that we're pushing lower and we created a new extreme, and we created a perfect two legs, the new extremes, you guys can see price likes to move in twos. This is why the second entries are so powerful. You have a two-legged pullback to the new extreme. You have a triple bottom confirmation right here, and this is looking like a temporary trading range, and you have a big steep move down. When you have a steep move down, you have to realize that these moves are not long-term sustainable. And take a look how far away you are from EMA. Now this is another price action basics. When you're far away from EMA, you have to understand that EMA will pull price closer to it. This is just how the EMA operates. It is just the indicator that is one of the uses of the indicator. And when it comes to failing in the breakout, we have to understand that it goes against human common sense, but this is exactly how price action moves, and we need to force ourselves to trust the rules, because you guys can see this is pretty counter trend entry to an untrained eye going long right here, but it's really not the case because the downtrend played out with the break, 2 legs to a new extreme, so downtrend is over with the new low. Not only that, we're coming below and we're going, you know, along below this support which got confirmed with triple bounce, and this is the failed breakout. And if you guys take a look on a 5-minute chart, this is a clear trailing range, and you have a big move down and you have a nice bullish bar. This is once again failed breakout. And if you guys take a look, on Friday's chart, I'm going to quickly show you guys how reliable it is. So you guys can see we are working in a trading range. We have a steep move up and we have this failed breakout into the trading range. So this is how price action moves, and you cannot really get confused and start selling right here. A lot of traders see this big momentum, these big bars, and they trade the breakouts. They think there is a strong momentum, but this is all just a trap to trap everybody in, and every smart trader, every institution is buying right here because they want to liquidate their position. All right, so now that we're coming from the failed breakout will a lot of times generate strong momentum in the opposite direction. So it's only natural for us to be looking to go long from this point on. We're not looking to go short because downtrend played out. As you guys can see, we have the short-term trend line working higher. We have a break, new extreme. We have a higher low setup, which was fairly tempting. If the bar ended a little bit better, this would have been a decent entry, but we have a break and a new extreme. And here comes the important information. The bulls are going to be strong and we're going to be above EMA and we're going to rally up higher, or there's a continuation of a downtrend and we're going to push back below EMA, confirming the bearish momentum. And this is what happened. We have a failed breakout, we push above the EMA, we're looking for reasons to go long. If EMA is holding price and the support, we don't get that. In case another situation, we push lower, indicating bearish momentum, and we have a first entry long, pullback, second entry long, failure. Remember how I talked about the second two-legged move, second entry? This is the second entry long against the trend because we pushed back below EMA now, so the downtrend is resuming. Okay, just because we have a break and a new low, that doesn't mean that we cannot make a few more pushes lower. We have to pay attention what is happening at the EMA. That we're either going to be above the EMA or we're going to push below. We push below. The signal bar is not ideal. I only marked it as an example because next time you're going to get better signal bar and you want to enter this. So this is a first entry short, second entry short, and it's a first entry long, second entry long, failure, coming off the support that now acts as a resistance, and it is below the EMA in a quick easy scalp. And you have another failed breakout and a strong push higher. And this really looks similar to a Friday session. As you guys can see, you have this uptrend working higher. You go into the trading range, you have a first failed breakout, pullback, and another failed breakout and another pullback. Okay, this is kind of similar. You have a downtrend working lower, you have a first failed breakout, pullback, another breakout, and pullback. Okay, so this is how these failed breakouts move. And we had an unexpected strong bullish rally, which was really there was no way to enter, and you don't really want to enter nowhere around here. Okay, when it comes to trading price action, you only want to rely on high probability setups. You want to take the second entries or failed second entries that are against the trend, and you want to be fading the breakouts. Okay, you want to wait for price to go to key entry point. Right here in this instance, you're not at the key entry point. There's just a bunch of first entries and you don't want to take the chance. Okay, but a lot of times these trends are going to be so strong that you have no other option to enter but just to risk a little bit. And this is why I marked this setup, because this is the new high and you have a first entry long, pullback, a second entry long, but you're not touching the key entry point right here. And even if I can make it just tighter and ignore it right here, you're at the key entry point, but you're really quite not touching the EMA. But it is a second entry long, it is a big bullish bar, you trapped everybody in, instantly reversed, and this is such a strong steep move up that this is your only chance to enter. So your odds are much higher if you're going to take the second entry long off the trend line potentially, or now the price is actually confirming the support that acted as a resistance, then taking these first entries, don't really enter during this. And market is pushing higher. Once again, you have a break and a new extreme, so you know what is happening. You want to stop going long just for a second right now, because this was a fairly strong move up, so you don't want to short either. So you have the dilemma here. The uptrend played out, but you don't want to go short in such a strong uptrend. So you're just sitting on your hands. You're being patient. That's how trading is. You don't stress about this. And you have actually a new high. You have a first entry long, pullback, a second entry long right here. And this would be a fairly good entry to take. I'm going to mark it because if you are a beginner trader and you're just following the price action and you don't really get a lot of experience yet, you don't know the nuances of the market, this is a two-legged pullback, second entry long at the EMA in fairly what it looks like a strong uptrend. So I'm not going to blame anybody for taking this second entry long because you're following the rules, and this one just failed. And sometimes that happen in price action. Nothing in price action is 100%, and you cannot stress about it. Okay, a lot of traders, they take the second entry long and they think, okay, I took a chance here, I was a little bit more aggressive than I would like, and it failed. And they see this first entry long, second entry long, and they think, okay, I took a chance here, so I'm not going to take a chance here. I'm going to wait for a perfect setup, and it will miss. And I'm going to see this first entry long, second entry long, and once again, I'm going to be, well, I was too aggressive right here, so I had to wait for perfect setup, and I'm going to miss it. No, you have to take all the setups. You cannot pick and choose when you're starting out. You don't have the experience yet. And this was just a fake out trap because they trapped everybody out and then instantly reversed higher, and then it worked. And this is a perfect fake out trap, and there's pretty much nothing to avoid it because you have no idea that they're just gonna trap you in just to see you go exactly where you thought it was gonna go. But here's the same situation as happened right here. You have a break, new low, and you're playing the EMA. You have a break new high, and you're playing the EMA. We're either gonna push below EMA, confirming the downtrend, or we're gonna push back above the EMA and confirming the bullish uptrend that is resuming. And we push back above the EMA, confirming the bullish uptrend. And you have a micro double top right here and double top, reset the count when you're counting for entries, and you have a first entry long, pullback, second entry long at the EMA, at the potential trend line. I was even looking at a spike and a channel live like this, and it looked really valid. So it doesn't matter how you look at it, you get to the same place. You have a key entry point right here. Oops. So this is a perfect second entry long following the price action. Okay, EMA is up, EMA is holding prices. You have a strong uptrend, and this is the second entry long of the key entry point. Okay, and price is pushing higher, price is pushing higher. And you have a first entry long, second entry long right here. But this is looking like a congestion. Okay, there's a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars going sideways, and you don't really want to take a chance trading this because a lot of time you will go long here, it will pull back, stop you out, and then it will reverse, or it will even stop you out and give you a failed breakout, and then it will go higher. It's just not really worth taking a chance. I know it is extremely tempting, and you probably know it's going to work because your gut feeling is telling you that it's probably going to work, which is okay, but you cannot reinforce bad habits. Trust me, a lot of times you will take a congestion entry and it will slap you back, and you will be wondering why it is failing, why you have a losing trade. It's because you're reinforcing bad habits. Okay, so I know that you want to take a long here that it looks like it's going to work higher, and you even got the 2 key entry points, which, you know, I can't really blame you for going along here, but you have to pretty much respect the congestion because this is just not a tiny congestion. This is really proven 10 bars sideways congestion. Okay, so this is not really what you want to enter. And price is pushing higher, price is pushing higher. A lot of first entries and a lot of failed second entry short, but you're far away from key entry point and you have a new high. And once again, price action is simple. You're not looking, there's nothing complicated. You have an uptrend, EMA is pointing higher, you have this trend line, you have a new high, you have a first entry long, pullback, second entry long. I actually refreshed my historical data and I have a better signal bar here. You have a second entry long right here, you have a downtrend working lower, you have a break and a new extreme. Okay, you have a downtrend working lower here, you have a downtrend working lower, you have a break attempt to make a new extreme, but the key entry points are so strong you will not get the new extreme. The price will bounce higher. Okay, so don't forget to draw these short-term corrections at the same time as you're looking for the bigger uptrend. So this is the short-term trend line played out, two-legged move down, second entry long, 2 key entry points, EMA and a trend line, and you're in a strong uptrend. Okay, this is extremely high probability setup. When I was watching this live, I had a bearish body here. So I had one bearish body here and I had another bearish body, and it really looked like, you know, you're pushing lower and you cannot ignore 2 bearish bars. But this is a great entry to go long here, and you guys can see this is exactly what it did. You have a break of the trend line. You even have a break of a trend line possibly right here. It is just quite tiny, so it depends how other traders see it, but you can treat it as a break, new high, and you have a 2-legged pullback. You have a break, new low of the downtrend correction. You have a first entry long, pullback, second entry long, big bullish bar. To me, this trend is so strong that it's just not going to reverse on a dime like that. Look, it started all the way down here, and take a look at the entire day. We worked higher. So this is a first entry long, second entry long, nice bullish bar, after downtrend played out, it is worth taking a chance. And now the price is just heading once again into this wedge pattern, which you don't want to take part of this. But hopefully you guys understand. The price action is not that complicated, really. You guys can see the lot of two-legged moves are so visible. You have a two-legged move to a new extreme. You have a failed breakout below the support, and you even have a failed breakout right here above this resistance, because this is looking like a trading range. So once again, this really worked too, but I think you want to respect the uptrend. So failed breakouts, they're so reliable just because it looks and it goes against common sense. The price action just follows perfectly, and every time you have a break-in and you extreme, and that doesn't mean we're instantly looking to reverse. We have to pay attention how the reversal pattern will establish, and we have to pay attention to how the EMA reacts. And this was really important, whether the EMA is holding and we're going higher or we're pushing lower. Okay, the same thing right here. When you have a break in your extreme, you have to pay attention whether we're pushing below EMA or we're coming back above it. Okay, and then basically all of these entries are second entries. All of these entries are second entries. This is just the first entry, and this is the failed breakout, which is a category in itself. The failed breakout doesn't have to be a second entry. A lot of times it even won't be a second entry. Okay, so don't get that confused and follow the EMA. And hopefully this video was useful. If you made it to the very end, that it means you're enjoying the content. So I kindly ask you to hit the like button, subscribe to the channel if you're interested about day trading, and I'm going to see you guys in the next one. So take care, buddy.